The tech sector has shrunk in Australia in terms of its headcount. They had a jobs target of 1.2 million tech roles by 2030, which now looks to be under threat. The Future Made in Australia agenda.
I think a lot of people that will grow our tech sector is actually moving here from overseas. It's so much harder to get sort of talent, and visas. That kind of goes against what people think with migration. Anyone with a desire to move here can move here. I just don't think that's the case. It just shows how attractive Australia is on a global positioning. But I do think that part of attracting people also to move here is housing, which is why it's such a big issue at the moment.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Wargent Property Buyers, and he is risen again. Chris Bates is back from the Alcove Group, mortgages specialist. Chris, great to see you. It's been, I think we had 2 weeks without you. I know you were pretty crook, but you look to be back on your feet.
Yeah, honestly, no one really likes to hear someone who's just complaining after they've been sick. But honestly, that was the sickest I've been in about a decade. I've got bad asthma and it's under control, which is good. But influenza A and asthma do not go well together. They both attack the same part of the body. And I got hit for more than 6. So I thought I'd be getting better. And I thought we tried both weeks to do this. We both delayed it day by day, but I could not even talk. So it's so good to be back and feeling healthy again, because you feel like it's never ending. And I've missed seeing your face, Pete.
Just, yes, likewise, mutual. Maybe there's something doing the rounds, because my wife Heather has had a sort of resurgence of asthma. She hasn't had it for years and years. And then just over the past 2 or 3 weeks, she's been so out of breath, and she's been upright, but just really struggling with asthmatic issues. So maybe it's just something that's doing the rounds at the moment. What else is news your end?
Well, I was down in Melbourne a couple of weeks before this, and we had the AFG sort of top 8 practices, and it was 2 late nights, dinners both nights, and late nights and me at my life stage just are not what I usually do. I'm usually in bed by 9:30 at the absolute latest. 8:30 last night actually. So I think that just made myself a little bit vulnerable. But it's an interesting time, right? Like it's what we're seeing on the ground. Obviously, business is still running behind the scenes, and just with the rate narrative over the last couple of weeks, been a big shift, I think, since our last episode. And I've sort of been watching our sort of inquiry, watching what our our client strategies coming back, what our lodgements are. I thought that probably a little bit more tentativeness would happen with that change in rates. I thought a lot of buyers, particularly upgraders, would say, well, I'm going to sit on my hands. But I'm being surprised. It's actually been a little bit of the opposite. We've actually seen, a little bit of upgraders come back and say, hey, I know rates are going to potentially be higher, but we still want to make this happen. We still are doing quite well financially, and we still need to upgrade, and we want to be ready for next year. So, it's going to be interesting to see what happens over the next 6 weeks till Christmas or so, and just see, more and more people getting ready for 2026, or does it really die off? We'll know as the weeks go on.
Well, there's not long left, is there? I'm doing a couple of searches for clients at the moment, and it's already sort of mid-November, and it won't be too long, maybe another month, and then things start winding down. So it's a bit of a race to the finish line. What else is happening? Actually, I had been planning for most of the past year to buy a property myself in Melbourne. I think we talked about it maybe 6 months ago, and after a very long search, I actually ended up buying on the Sunshine Coast. So it wasn't what I was necessarily planning, but found a good deal. And there's a lot of investment happening ahead of the Olympics, Maroochydore CBD. And of course, there's so many people moving to this part of the country. I just figured that undersupply story is kind of just almost never ending up here. So that's what I've been up to. And I think you're right, just in terms of momentum. If you look at Westpac survey, had consumer house price expectations at a 15-year high. The Cotality chart pack, which was just out this morning, actually, the day of recording, the housing market had a total valuation of 12 trillion. And I think even though Cotality said even though rates are expected to be on hold at least until February and maybe even until the middle of next year, house prices are expected to keep rising. ABC News Business reported that entry-level prices below the price caps actually rose faster than the the wider housing market in October, which kind of makes sense. We've got a 5% deposit guarantee in place. So it would sort of make sense that the bottom part of the market is leading the recovery. But I just don't think we should necessarily judge a policy based on 1 month of data. I guess what the HIA have said all along is that in the first instance, we get more demand coming in that part of the market, but over time it should drive more supply as well. And we probably need to judge it over a longer time frame than just a few weeks.
I think we were warning about this as soon as we heard the change. And it was all the way back at the election. It went really quiet, right? Like everyone forgot about it. And we were like, when is this media storm going to start hitting about these 5% deposits? And I think it was about late August or something. I think when I was overseas, I did a post on it. It went absolutely viral. I was like, everyone, what do you mean this is happening? What do you mean this is changing in October? I mean, yeah, this has been happening for months. And, it didn't take a rocket scientist to figure out that it was absolutely going to bring forward a lot of future demand. A lot of first-time buyers that weren't ready were going to get ready. And because it just lowered the hurdle to enter and increases the opportunity for first-time buyers because their number of properties they can look at, and all the ones that weren't eligible because of their incomes were too high are now eligible. So and I think that'll continue. I know what you're saying there, Pete, that, it's too early to sort of say, but I think you'll find that the bottom end and first home buyers will do quite well. We'll push up prices in November and in December, and I think all the way through to next year. And because if you've forced out of one suburb, that FOMO will shift you to a different suburb. And missing out. And particularly as you see prices run, you'll get even more FOMO to want to enter. And unfortunately, I think that's what's going to happen is the bottom end is going to be really supported by first home buyers. And I think investors are going to stay strong into 2026. I think it's just, there's a lot of people who are, putting any upgrade on ice. They're not planning on ever doing an upgrade. They've got a lot of equity and they are absolutely looking to use that to invest, and investor lending is really high. The big change I think we saw a couple of weeks ago, which we haven't spoke about, Pete, I feel like I've got to do a 3 weeks of updates in one episode here, but Macquarie made some major changes to trust lending a couple of weeks ago. I'm not sure how much you covered it, Pete, but yeah, that was a big change. We were seeing that, and we were already talking to the banks internally that we didn't agree with the behaviour of a lot of influencers in this space. And I did a post about it, and I was talking to Ben Kingsley about it and other people, and bang, all of a sudden Macquarie changed their policy, NAB's now changed. And so this unlimited borrowing capacity sort of storm that was created in the last 12 months by a lot of property channels, that's really unraveling, which is not great if you're in those positions, because you really need lending to be liquid when you're going to structures like that, because you really need to be able to refinance. Otherwise, you can become a mortgage prisoner pretty easily.
Yeah, the reason I was laughing is I did mention it last week, but I said I won't mention the lenders, but I said a couple of the larger players in the space have cracked down on trust lending. But now Chris has revealed the answer anyway, so Macbank and National Australia Bank. So yeah, I wasn't sure about the legality of talking about specific policies because I'm not a broker, right? So I just sort of let that through to the keeper. But yeah, you're absolutely right. And yeah, it caused a bit of a stir. I saw I think it was Channel 9 News did a piece on it with Ben Kingsley and Melinda Jennison. So yeah, just have a think about your borrowing strategy if that's something you've been involved in. I think I was just browsing through the chart pack from Cotality, Chris. The mid-sized capitals continued to roll and gain momentum in November. So I guess it's the stats only go up to November the 10th. But if you look at the rolling 28-day change, big re-acceleration in Perth since the first homebuyer scheme came into place, plus 1.9% in 28 days. And also Brisbane has just taken off at 1.8% in 28 days. Adelaide, Melbourne, Sydney, maybe a bit calmer there. But yeah, certainly in the markets that already had some momentum, it looks like things have just almost re-accelerated a bit more FOMO, as you said, in that lead up to Christmas.
Yeah, I think the interesting on the Cotality, I mean, obviously the 12 trillion number, I remember when it was probably 8 or 9, just looking on one of their charts at the end of the pack. I've been reading that for years. So I reckon it was probably when it was like November 19, like 7 or 8, I was sort of always following these. To go from 7 or 8 / memory that back then to 12, that's a $5 trillion of extra wealth in the property market. And I think the thing to remember here is that the debt in the market hasn't gone up that much. It probably has gone up a fair whack. It's probably about 2.5 trillion total debt now. I think it was more like 1.4. But so that's maybe gone up a trillion, but, actual property wealth's gone up 5 trillion, which you can show that the market's not being pushed up by debt. It's pushed up by people just reinvesting profits back into property. So what do you think about that, Pete, as well?
Yeah, I'm old enough to remember there was a sort of a book or an ebook doing the rounds years ago called Australia's $2 trillion housing bubble. I mean, you're right. I mean, of course, debt at the margin, more debt pushes up prices. And we did talk a little bit last week, actually, about whether does credit growth drive prices, or does people bidding up at auctions drive credit growth? Is kind of a bit cause and effect. But I think 2.5 trillion of mortgage debt. All of the major banks have released trading updates or full year updates in the past week, and mortgage arrears seem to be on the way back down. Obviously, there was a period there through COVID where a lot of people were put onto hardship policies, and some people really struggled because they were either furloughed or lost their business or whatnot. But it seems we're well and truly through that with lower inflation and lower interest rates. Most of the banks now just reporting arrears falling. Interest-only lending, is somewhere between 15 to 20% for most of the banks on the flow of new lending, but actually across mortgage books, very, very low now. So, I think it's 2.5 trillion is a big number for debt, and 12 trillion versus Australian GDP is a very big number, certainly when you compare to the US. But the momentum all seems to be with the housing market at the moment.
Yeah, absolutely. And I think the Perth and the Brisbane one, I think it's just a story where supply and listings really do make, one of the biggest things that, forecast sort of growth. Brisbane sort of listing numbers are just diabolically tied up there, and which you know better than anyone, Pete. And you can see if you increase demand on a small number of listings, that all of a sudden you create competition. And so this reacceleration of first-time buyers and investors into the market is just at the time when listings are really tight. And so you can still see markets continue to kick on. Should we go into our stories this week, Pete?
Yeah, you're right. I think actually just chatting to Andrew and the guys in the team, there have been a few more listings just come on in the last maybe 2 or 3 weeks. I mean, it's already mid-November, right? So it's not going to be a long window there of more supply potentially, but at least some people are getting a bit more confidence and listing. And SQM did report a bit of a sort of a surge of listings in Sydney and Melbourne, but it's pretty late in the year now. So yes, it might not be a huge period of time there. So let's go through our big 3 property news stories of the week. So stick around because we'll do a listener Q&A at the end as well. So stick around for that. So first story of the week from the Grattan Institute, quite a big white paper or report they put out this week. More homes, better cities. So housing developments of 6 stories or more should be allowed as a right around major transport hubs and key commercial centres. So Grattan's report suggests that restrictive planning controls potentially add hundreds of thousands of dollars to the cost of new housing in the capital cities. They just some interesting stats they pulled out in the report. Within 30 k's of the centre of Sydney, about 80% of resi land and 87% in Melbourne is zoned for housing of 3 stories or fewer. So if you think about Sydney's eastern suburbs and you go down the beaches there and you see a lot of kind of 3-story height limit developments, if you think about the beachside areas and so on, you don't get so many big tower blocks, and that's due to the zoning in those areas. 3/4 or more of resi land in Brisbane, Perth and Adelaide is zoned for 2 stories or fewer. So Grattan's view is that reforms could lift construction, certainly would in the short term, I think, across Australia by up to 67,000 homes a year, which is a big number. If you think about we're building maybe 190,000, we'd have to certainly find the trades and the materials to achieve near 250. But this could cut over a decade, could cut rents by 12% and slice more than 100k off the price of a median priced home, and maybe more in the longer term. So, Chris, zoning's all over the news at the moment. It's all the rage. What do you think? Is that a feasible set of numbers?
Oh, I do like this report. I mean, I know Brendan. He's a good communicator and he's a smart guy. And He's quite funny as well, to be honest. And it's a really good report. I mean, I think people get a bit frustrated with Grattan. They think it's all political sort of, driving. And yeah, maybe there's a political element to a lot of these reports. But the reality is, if you look at the chart pack, I mean, the report's good. I mean, I like charts personally. If you look at the chart pack, there's some really interesting ones in there that you can learn on. Like the density of our cities compared to global cities. We're not dense at all. How we're building, Australia population per adult, housing per adult. We're diabolical compared to lots of countries around the world. We're just not building enough. We did a lot in the 40s, 50s, 60s, 70s, 80s, and even the 90s. But the last 20, 25 years, we've been growing our population much faster. They basically highlight we're not building anything in the sort of, 5 to 20K ring, which it makes sense, right? That's where NIMBYism has been so strong. And that's kind of what they're sort of highlighting is that, there's a way to sort of densify our sort of middle ring. The heritage sort of controls. One of the benefits when you're sick is you can't do much, so you watch a lot of things. And I watched Melbourne, The Lost City on Netflix. If anyone it has an hour free to watch that. It was very interesting. It talked about the boom in the 1800s in Melbourne. It was the fastest growing population in the world. It was a place to be, and we built some amazing buildings. But then it also, after the Olympics in the 1950s in Melbourne, they basically went on a rampage and basically knocked down a lot of these amazing buildings. There's still a little bit left over, and it was sort of made me go on a bit of a rabbit hole looking at heritage and things we've lost around the world through building booms. And I think this is where sort of highlights that heritage is maybe being overused, but also there is a real importance in actually, certain zones like heritage zones where basically you do need to try to protect that. It's like a little like sanctuary within the capital cities. And I think they all need to be reassessed across our country. And maybe heritage still has a place, but it has to have a place within a much smaller boundaries. And we're really restrictive in certain pockets of suburbs or some suburbs, but not vast overlays, which we've got in Sydney at the moment. What were some of the other things you found in that report that were interesting?
Well, I think the heritage thing is interesting, isn't it? Because people often find ridiculous examples of something that's protected by heritage overlay, and then you see the actual building in question, and it's a complete wreck of a Queenslander that is unlivable and termite infested. But because of the age of the building, it's protected by heritage. I mean, there's clearly some scope for reform there, and I suppose the counter argument is always. Somebody who's a Brit, when they introduced the big inheritance taxes, a tenth of the country estates were just pulled down and demolished. And the rest, a lot of them ended up being gifted away to charities and whatnot because nobody could afford them. If you what's the old Joni Mitchell song? You don't know what you've got till it's gone, sort of thing. That's the argument for heritage. I think some of the easy wins would be particularly around transport hubs and train stations because you've already got ready-made transport links, plus there's a lot of commercial anyway around the train stations, and yet we still have height limits restricting construction. I think at least some of the handbrake on supply at the moment is just that stuff is not feasible to build. I saw a report by Michael Matusik about the Gold Coast. There's a potential 50,000 units that could be constructed on the Gold Coast, but there isn't the appetite or the feasibility to get a lot of these projects out of the ground. So yes, zoning is part of the puzzle, but I think at the moment it's difficult to make projects work given the increase in construction costs. The cost of capital's gone up quite a bit as well. But certainly over the long run, it would make sense if you can build more units on in a suburb or more townhouses, attached dwellings, then yeah, it's got to have an impact on supply. And I can almost sense that if we're having this debate on Twitter, people would be pitching in and say, well, yeah, but why not cut immigration as well? But that's become almost an ideological debate as to whether, what's the right amount of immigration or population growth? Because obviously that's a massive lever as well. But at the moment, things are still running hot in that regard. So yeah, I think it's a pretty interesting report and it does make sense. I guess there's always a fight back from the NIMBYs when this sort of stuff is proposed, particularly If you're thinking about some of those LGAs like Woollahra and Manly and the Sydney eastern suburbs and around Waverley, where it's pretty difficult to get bigger projects through. So, yeah, but you can see which way the tide is turning or shifting, and it's towards allowing for more density and bigger height limits.
Yeah, I mean, I admittedly get a bit obsessive when I find out a change, whether it was the work from home movement. And at the moment, I'm a little bit obsessive about this conversation. I'm doing a lot of digging around applications with councils, amalgamation of sites. In New South Wales, you've got the significant sort of development register that basically you can see when people apply for that, and you can see it in real time because it's all on there. And so you can really and I'm tracking on forums, all new developments, etc. I'm just trying to really figure out how is this going to play out, particularly because I think it has a huge impact to the livability, the desirability of certain suburbs and pockets. And I think what's happening in Sydney is, and Melbourne, Victoria actually got more relaxed planning controls than New South Wales, by the way. And I think it's just really interesting to see how the city's going to handle it. And then also how it's going to, basically change livability in the upper north. There's a lot going on in sort of the Linfield, sort of Killara sort of pocket. There's a lot going on in the eastern suburbs. Like there's a hell of a lot going on around Edgecliff, Double Bay, Rose Bay, in particular, into King's Cross and Darlinghurst, and and so and then even on the beaches, there's a one in Narrabeen. It's a 6-8 level sort of apartment block that just doesn't suit anything else in the area, and the locals up here are getting all upset. But that's called Oceans in Narrabeen. So yeah, I think it's one of these stories that I'm really tracking. And the thing with Instagram as well, you see these projects. Mossman and has got some crazy projects going on there. Bondi as well, and so. Yeah, let's just keep talking about this, Pete, because there's a reality of what people want, and then there's a reality of what's happening, and it's changing suburbs, it's changing the city, and it will have knock-on effects because this is a once-in-a-generation shift. It's never been like this as far as I can remember.
Makes sense. Okay, Grattan's conclusion, I quote, the equation is simple. If we build more homes where most people want to live, housing will be cheaper and our cities will be wealthier, healthier and more vibrant. So second story this week from Nerida Conisbee and Ray White. Will your next home be built by a robot? We're not building anything like 240,000 dwellings per annum. We're currently managing about 190,000. She's saying we don't even necessarily have the workforce to do it, so the housing deficit continues to grow. Housing Industry Association says we need a 30% increase in the skilled trades. I think partly because you can't just bring in ready-made tradies into Australia because the regulations don't necessarily allow for that. And I think the other thing is we have a heavily unionised workforce, so construction costs in Australia have basically gone up every year for 60 years across all of the available stats. So she questions in the article, could prefab or modular builds be the answer? Currently, only 5% of Aussie homes partly use modular construction techniques. So some countries, says Nerida, like Sweden, it's very popular. 86% of homes use some form of MMC, modern methods of construction. Japan is 13%, UK 16%. I suppose if you were going to think about doing this in Australia, Chris, it's not particularly popular at the moment, but you would think, particularly in some parts of regional Australia, it would be easier to do that. It's easier to transport materials. You've got the space to have warehousing. And you've got lots of land as well. It's a big country out there. So far the appetite's been pretty low. But do you think this is A, something that could become more popular, and B, something that could help to move the needle for housing affordability and construction?
I can't remember where I heard this, Pete. And I've heard it a few times now, actually. And it's with this sort of movement around sort of technology and AI, and and you're thinking, like, what would you advise a young one to sort of get into? What's a secure job? What's something that we're going to have to do in this new world? And you look at these jobs on Nerida, like carpenter, electrician, plumber, painter, bricklayer, like there's got to be some good opportunities over the next 10, 20, 30 years to build a really solid career in those professions, right? While technology is doing whatever it is to the service industry and professional services and lawyers and et cetera, you have to say, are robots really going to take these jobs? Probably not. Are we going to build prefab? Absolutely. I've got clients working at a number of different prefab companies, and I've been a massive advocate of it for many years. The banks were really holding that up. The bank policy change the last 12 months is really heading in the right direction, and it's got some real support about it. It's almost every week you see a news article or an ABC report on prefab or something like that. So, yeah, I think it's interesting on this report, though. You say, Pete, we need let's call an extra 30% of trades pretty much evenly split across all the different trades. And that's pretty hard to grow an industry by 30%. Whether you retrain in it, you're not really productive in these jobs till you get a few years in anyway. So really, we're not going to get anywhere near that 1.2 mil. Let's just say we need 30% less than that. We're probably going to be about 850 sort of thing. When if you look at the long-term average, even 850 is a bit of a jump of what we built in the 2010s. And we had a bit of a building boom in 2020, but we all know that didn't last for very long.
Well, we talked a few times about challenges facing young people and housing affordability, but also in their careers. Our next story is about artificial intelligence and job disruption. But if you look at the skill shortages that Ray White have put up here, the trades that are most needed or most workers needed: carpenter, electrician, plumber, painter, bricklayer, cabinet maker, plasterer, tiler, concreter, roof tiler, floor finisher, glazier. I've got loads of clients. I've often said many of my best clients over the years have been in the trades because they work hard, they're very proactive, they often have an affinity or an understanding of real estate, and they're very sort of decisive people very often, and they've sort of got a sort of can-do attitude. I guess there's a big question for a lot of young people now as to if you're thinking about going into higher education, potentially racking up a lot of HECS debt. It depends on the career you want to do. I think if you want to be a mechanical engineer or a doctor, then maybe the university route is what you've got to do. But then on the other hand, there's, as you said, there's stacks of opportunities across all of the trades, and that's just the sort of the total number required. If you're somebody who's actually motivated to crack on, then I think if I was having my time again, I'd be probably quite heavily incentivized to choose a trade and go with that. So as Nerida points out, in the UK, I know that there's a little bit going on in the prefab space, but a lot of times it's parts of housing that are constructed and sent to site, rather sort of precast concrete and things like that, rather than the whole build. The sort of totally built prefabs, that's not really taken off. So I think it's an interesting space. Obviously, land prices are the big challenge in Australia's capital cities, and that can't be easily fixed by prefab and modern or modular construction. But it's definitely a trend to watch.
Yeah, my brain goes a little bit too quick for when I'm doing stuff around the house. I get myself injured all the time. I'm not the cleanest. I make mistakes. So I'm glad I didn't probably go into those trades because I wouldn't have lasted very long, if I'm honest. But I do think it's an industry. It's also one that I do think if you see, like, as soon as there's some business sort of minds go in there, and they get the payroll and the HR right, and they get their website, and you can see some companies that have scaled really effectively in this space because it's one of those jobs that's really hard to sort of scale, right? And as soon as they overlay a bit more efficiency, they do really well and have no problems getting new customers. So, that's the big story with the AI, right, Pete, is how is that going to impact property prices long term? And, is it going to happen faster than we expect? Is it going to happen slower? Are we going to see massive redundancies? Are people going to get retrained? Are we going to be more productive if we use AI as businesses? And does the economy grow because of that reason? And it's one of those. My take on it so far, though, is, Pete, that it's probably unlikely to happen as fast as people expect. I think there was just a hype boom around AI, particularly when people first use something like ChatGPT and they're like, oh my God, this is going to change the world tomorrow. And I think people are starting to realize that it's not that simple. And we still got to figure out what's all the test cases. Where's AI really going to help us? Where's it not really helping us? I think that we're in this stage at the moment, but I also know that where we are today is the worst it's ever going to be, and it's getting better every day.
Well, so the Australian did a piece this week on the shrinking tech sector in Australia. So this is our third And final story of the week before we do our listener Q&A. The tech sector has shrunk in Australia in terms of its headcount. They had a jobs target of 1.2 million tech roles by 2030, which now looks to be under threat. The Future Made in Australia agenda. The tech sector has lost more than 30,000 in the 2025 financial year. Job numbers falling to 949,000. The sort of bull case, and Scott Farquhar from Atlassian on the Tech Council of Australia still sees the tech boom going ahead. And of course, they've got the big key, they'll be the key tenant in that huge new development at Sydney Central Station from 2027. But I think, just looking around the world, Amazon cut 14,000 corporate roles last month. US companies more broadly sort of plans to cut 150,000 jobs in October. That's up from about 50,000 in September. So, yeah, I think, I don't know. Yes, as you said, this is not all AI. Maybe this is just the stage of the job cycle we're at. I saw overnight HMRC payrolls, another big drop in the UK. Unemployment rate rising from 4.8 to 5%. So I think, yes, I mean, there's New Zealand, Canada, US, UK, all of those countries are sort of in a situation where unemployment is rising anyway. And it looks like Australia is sort of on that trend as well. There's other stuff going on in the background, potential for working from home mandates in Victoria, some of the major banks losing their working from home court cases. So I think there's a lot of the ingredients there for potentially a lot of offshoring of roles, and AI is obviously a part of that story. So as you said, I don't know whether that's something that starts immediately or whether it's something that's more of a medium-term risk, but there's a few sort of early warning signs there. Including in Australia, there's maybe some of the sort of more sort of tech roles and some of the roles that can be done offshore are maybe being cut.
Yeah, I think it's going to be interesting to see how this migration story plays out as well, Pete, because I think a lot of people that will grow our tech sector is actually moving here from overseas. I'm speaking to some recruiters in this space, and they're just saying it's so much harder to get sort of talent. And visas, the cost to do so. And that kind of goes against what people think with migration. Anyone with a, desire to move here can move here. I just don't think that's the case. I think that's just shows how attractive Australia is on a global, positioning. But I do think the part of attracting people also to move here is housing, which is why it's such a big issue at the moment. Should we crack in with these 3 to Q&A, Pete?
Yeah, we've got time for a couple of questions to wrap up this week, so let's do that. So first question from Basement Dweller. Is there growing demand for multi-access or multi-generational housing in Australia? If contemplating land subdivision and new build, what factors should be considered in the design? How much can yield or capital gains increase, and what are the pitfalls? So I think if you were, I suppose the bull case for multi-generational housing, well, I mean, you only needed to look at the cricket at the MCG the other day to see how Australia's demographics have shifted over the past 20 years. Enormous increase in Indian migration, and maybe that goes partly hand in hand with closer family ties. So I suppose that's your kind of bull case, is sort of closer communities and bigger families located in the same suburb. I think the risks with this kind of thing is that when you're building something that's a bit more niche, then your resale market is potentially smaller or thinner. So I think you generally, if you're constructing something, you want it to appeal to the broadest range of people. And normally in Australia, that's the sort of family appropriate detached housing. I think multi-generational housing, yes, potentially you could squeeze out more rental yield, but the resale market might potentially be a bit thinner. What do you think, Chris?
I do think that we're going to see natural evolution of the market is longer loans. I don't know if you spoke about that last couple of weeks, Pete, and then the 40, and Trump even came out with, not that it's here, but a 50-year home loan, I think it was in the US. I think we'll start to see the longer loans are going to start to happen more and more. It's starting to get more and more banks are looking at that. Secondly, it will be the point where if prices get too expensive, people start to pool resources and we start to become a multi-generational driven property market. And I think that's one of the next evolutions. People combine resources, parents, grandparents with, parents and grandkids, and, bigger homes that suit different families, situations, whether, sections off, whether they're granny flats or upstairs, downstairs, or, people do duplexes together as families. I think this is absolutely where we're heading. I'm not sure whether that's where we are now. It's like when people are moving to apartment living, people are still absolutely trying to get to live in a house. But I think in Sydney, even for the last 10 years, I've sort of been talking about this shift from moving from houses to apartment. And naturally, the Sydney market is going to be driven by, high quality apartments are going to get driven by really strong demand. People are going to choose that as a way of living, particularly also in a city like Sydney, where lots of people are from different countries around the world, and they've often grown up in apartments. And so it's not that white picket fence in a big quarter-acre block isn't their dream. It's different. And so I think, and similarly, multi-generational family houses are a big part of other countries around the world. And I think that's going to be where we're heading. I'm just not sure whether we're there yet. But if you buy an asset that suits that, I think it'll do very well in longer term, because I think there'll be a real desire for those bigger properties that allow multifamilies to come into.
Perfect. Thanks, Chris. Second question from Bear. Hi there. I'm a 21-year-old currently living at home with 1 year left at uni. Since turning 18, I've been heavily invested and I built a net worth of just over 100,000. Amazing. Certainly you're streets ahead of where I was as a uni student, that's for sure. I'm planning to buy my first property in Sydney within the next 1 to 2 years once I secure a well-paid graduate role to comfortably manage the mortgage repayments. I've heard mixed opinions about the 5% deposit scheme. On the one hand, it allows for greater leverage if property prices continue rising. On the other hand, much higher mortgage repayments. What are your thoughts? Or should I wait to save a larger deposit? Also, I'd love your view on apartments v houses. Which do you think is likely to perform better in Sydney over the next 5 years? Thanks for all the insights. Yeah, so, on the apartments v houses thing, I think generally speaking, there's enough stats out there over the years to show that a house on its own block of land has outperformed units. I think it's just the scarcity value of that type of property. There's fewer of them being built, and a lot of families want that type of property. The challenge, of course, as an 18-year-old is, can you afford one? Because it might mean going all the way out to the city fringe potentially to be able to afford a house. So that's really a question of what you can afford. On the 5% deposit scheme, yes, I mean, so banks will run stress tests now anyway to ensure you can comfortably afford the mortgage repayment. So you probably won't overstretch in that regard. But obviously, when you're going in with a 5% deposit guarantee, it's a slightly different equation. Chris, this is right in your wheelhouse. How do you normally think about this for a first home buyer?
Well done, Bear. Smashing it.
Amazing, by the way. Amazing
Yeah.
effort. I think I had a savings of 0 when I was at university, so that's an incredible effort. Well done.
Yeah, maybe don't tell your parents too much, mate, because I'll probably start charging you a board. They'll be like, hang on a sec, he saved 100 grand living. No, I'm just kidding. But obviously a good job. Hope you're still enjoying life as well. Not making, you only get your early 20s once, mate. So maybe you still enjoy your life. Don't be never going out and about, but absolutely still doing the right thing, saving. But yeah, I mean, your question's got a few elements to it. I mean, firstly, the 5% deposit scheme, is it a good idea? Look, yeah, absolutely you have higher repayments, but the only alternative to that is, spending less, which may or may not get you a better quality asset. So you've got to be careful. The other option is you save more, right? You have a smaller mortgage, but you're probably going to have a bigger mortgage anyway because prices are going to go up. So, I think what you want to just be sure is that the reason why it's so attractive, the 5% deposit, if you pay, most likely no stamp duty because you're going to be paying under the amounts in Sydney. And secondly, you're not going to be paying any lender's mortgage insurance. So your cost to purchase is really just the deposit plus, legals and things like that. And so your cost to transact is really limited. And so really, if you decide to then sell it in a few years' time, you haven't already sunk this huge amount into sort of cost to buy. And so if it goes up just even a little bit, you've really only got to recoup what the selling costs are, which is say 3%. So it really limits your risk. Obviously, the risk is in not being able to afford your repayments. It sounds like you're not probably going to have that risk, if I'm honest, because you're a very good saver. It sounds like you've got the ability to do delayed gratification and put money in the bank account versus spending it. And if you went and bought something, you're the personality that would do everything you can to make sure you can afford it. And so Are people also going to potentially over leverage, not like you, and potentially take out mortgages too big? Yes. But they're going to then potentially have to then resell into a really, probably into a rising market, and they'll probably end up being a good financial decision for them as long as they bought, a decent property. And so, yeah, that's the irony of the 5% scheme is it's there to help first home buyers, but what it's also doing is pushing up prices. And so is it really helping them, or is it just basically giving them bigger mortgages? That's obviously that's happening. Houses or apartments, I mean, I doubt you're going to be able to get into the housing market. Let's just be real. The median price of houses in Sydney is 1.7 million. Even if you went into the western suburbs of Sydney, I'm not sure whether you're going to have a grad salary that's going to allow you to get into the housing market. So you might have to just not be worried too much about that. But then if you are going to play in the apartment market, see if you can buy a good apartment and educate yourself on what that is. Based on your budget. And it sounds like you're studying hard and you're looking for a well-placed grad role. So that sounds like you got a good little strategy. And might not have to use your full 100. Try to keep as much as you can for a buffer as well, because you can put that into an offset account and use your lending just to get yourself one really good apartment. Probably is a good move. And if you keep a bit of cash left over, who's to say you can't then reinvest that back into the property, paint it, maybe do some really smart renovation to it, and all of a sudden your extra 20, 30 grand could maybe add some value as well. And so, good job there. You're doing well for a 21-year-old.
Oh, to be 21 again. I sometimes wonder, if I knew then what I know now and all that kind of thing. But you can't live life backwards. But I'd love to be 21 again. Very envious. So good luck with your journey, Bear. So that's all we've got time for this week. So come and join us at the Rask Community Forum, community.rask.com.au. This weekend, we've got a bit of a play date thing going on. Some friends coming up from the Gold Coast. How about you, Chris?
It's actually my boy's birthday. So he's turned 4, which is pretty crazy, to be honest. He's been doing so well the last few months. And so, I'm super, super proud, to be honest. He's got through his 3s, probably going to made a decision. Does he go to Luna Park or could he go to the Reptile World on Saturday? So he was a big decision in the bath last night. He went for Reptile World.
Good choice.
And then Sunday, we've got a birthday party for him with he just loves nature, and so we've got this thing called Nature Play. We go for a bit of a bushwalk and they show him all little balloon-tailed lizards and snakes, and so that's our weekend. What about you, Pete?
I love that thing at the reptile park where they just let the snakes out and they just walk around, these massive pythons. I think a 4-year-old would probably be a bit scared of that, but I suppose get some exposure young. Pretty quiet for us. Actually got some work on Saturday and then a bit of a play thing as well, play date. So not too much exciting here, but we're in the countdown to the cricket now. Only a week or so away from the Ashes kicking off, so I'll be sort of glued to the TV for a while. And of course, the Brisbane Test coming up in only a couple of weeks, really. So, a bit of sporting excitement to come as well. So thanks for joining, everyone. Send in your questions for our listener Q&A and look forward to catching you next week.
See you next week. Thank you.
Cheers, Chris.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.